Trump can essentially rug pull all these other emerging markets that are trying to control the capital flows of their people by embracing Bitcoin and digital assets. It advances their policy.
Hi, everyone. Welcome to Bits and Bips, exploring how crypto and macro collide one basis point at a time. I'm your host, Noelle Acheson, author of the Crypto is Macro Now newsletter, bravely filling in for James Seifert, who is taking a well-earned break. I'm here with Alex Kruger, Kruger Maktar of House Asgard, protector of the realm, and Ram Ahluwalia, master of wealth, leader of Lumida. Hi, guys. Today is a very special show, as it is the last one of the year. The Bits and Bips team will be taking a break over the holiday season. We'll be back in early January. And so, as well as discussing the latest developments in macro and crypto, today we're going to be looking back and looking forward. It's also a very special show because we are joined by special guest Mauricio de Bartolomeo, co-founder and CSO of Ledn, a leading provider of crypto-backed loans. Welcome, Mauricio.
Welcome, everybody. It's a pleasure to be here. Big fan of the show and all of you guys. So happy to have this chat.
I'm excited to have you here and such a good timing as well. Now, before we dive in, I do need to remind everyone that nothing we say here should be considered investment advice. Do please see unchained.com/bitsandbips for more disclosures. And, with that, let's dive right in. But first, Mauricio, I want to give you a chance to explain to our viewers that aren't familiar with Ledn its origin story, but also your origin story, how you got involved in crypto.
Sure, thanks. I'll try to keep this brief because it's a long story, and both my journey and Ledn's journey, do somehow collide, and one leads to the other. But for those unfamiliar, my name's Mauricio, as you mentioned. I'm a co-founder of Ledn. Ledn started in November 2018, so we've been doing this for 6+ years. But how I got into Bitcoin is a little bit different, I guess, than I think what most people are used to. I'm originally born and raised in Venezuela, and that's where I grew up. And I quickly became exposed to hyperinflation and broken economies and, the country basically collapsing. And it was in the middle of this collapse and this, horrible capital control that people were, frantically looking for options where the government made it illegal to hold dollars, illegal to basically buy or keep anything that would store or maintain its wealth. Even as far as non-perishables. So people in Venezuela at this time had 2 jobs. They had their 9 to 5, and then they had to get rid of the fiat and that they got paid on Friday before it became worthless by the next day. And it was in the middle of this hyperinflationary wave that my youngest brother finds Bitcoin in Venezuela, and they started mining Bitcoin back in 2014. As many people know, Venezuela basically ran into crypto and Bitcoin back then because of the hyperinflation and the capital controls. And people found in Bitcoin a solution to their problems, and they ran at it and became very active users. Many people started mining. We helped a lot of people get set up in mining in Venezuela. But as fate would have it, anything that is pro-freedom in Venezuela gets eventually chased out by the government. So the regime did a witch hunt or a crusade against miners. My family was one of the first targets, so we had to basically leave. They had to leave the country. But back then, back at that time, I was in Canada. My family was still mining in Venezuela, and I was desperately trying to find a way to get involved in Bitcoin. Not in Venezuela. They were mining because they had heavily subsidized power and hydro. But I was helping other miners in Canada and the US and other places that have very similar issues. They had Bitcoin income and fiat expenses, and nobody wanted to sell the Bitcoin to grow the business. And surprisingly, I went around looking for somebody that would give us a Bitcoin-backed loan back in 2017, 2016, and we got laughed out of the room. They told us Bitcoin wasn't an asset. Who would want to do that?
Too volatile anyway, right?
Yeah, innocent reasons here. And then by the third or fourth meeting, my business partner and I looked at each other and we said, everyone seems to be sleeping on this. I think we have a big chance here of solving our own problem and building something that could help a lot of people. And so we did, and we set out with a very simple goal, which was to do Canada's first Bitcoin-backed loan. We did that November 2018, and since then the model got proven. People found use in the product. We started servicing miners in other parts of the world, and then we quickly brought the product to Latin America, where I was from, and I knew how to sort of pitch the idea and how it could be useful for them. And the whole thing has, snowballed into now today, where everybody now, realizes, or a lot of people are realizing that selling your Bitcoin is a bad idea, and they're looking for options to borrow. And here we are, as what started as a small idea. We are now the leading company that offers these types of products. So we're very proud of how everything has turned out, and we feel like we have a big opportunity ahead of us, and that's what we squarely focused on.
What kind of regulatory pushback, if any, did you get in the early days?
So the lending part, there's two sides to our business. There's the lending component, and then there's the sourcing capital component. So a loan has two products. There's the lender, and then there's the borrower. So on the lending side, to go to the end consumer, most of the regulations are around consumer protections, and they are based on a state-by-state level, province-by-province level. And generally speaking, when it comes to lending into a country or into a jurisdiction, the most important thing you have to watch out for or make sure you're compliant with are anti-money laundering and consumer protection laws. And these are usually to ensure that lenders that are coming into a jurisdiction are lending below what they consider usury rates, and making sure they're disclosing risks and everything to the clients. So on the lending side, it's been interesting. I would say it's been a lot less challenging to lend into a place than it is to source capital from a place. That's where a lot of the securities regulations are around. And by and large, our loan product is available in, a large part of the world, I would say, a large part of the US, a large part of Canada. However, when it comes to yield, as in earning interest on your dollars or your Bitcoin, or our products like B2X, which is a loan to buy more Bitcoin, and even our DCNs, which have derivatives on the back, those products are a little more nuanced, and the regulation there is a little bit more spotty, because certain countries have different rules that allow you or not allow you to do that. But I would say on the lending side to the consumer, I would say it's been a great experience. It's been a good experience. Ledn has a squeaky clean track record with regulators worldwide. I think that's something not a lot of companies can say, and we're really proud of. On the yield side, it's been that's where a lot more of the pushback has been. So if you think back to the SEC shutting down the BlockFi, investment accounts, or the or Nexo had similar offerings. We had a similar offerings. All those accounts have basically got unwound way back then. And I think on the now that we have a new administration, that might change going forward. But our job is to comply with the rules and to help update those rules as needed. So I'm optimistic that you're going to see a lot more clarity from the regulatory side, and that'll open up the door for a lot more lending products to be offered into markets like the US.
Hey, Mauricio, I'll be brief. How does your business model, is it similar or different than the last generation of lending firms, especially as it relates to rehypothecation? Are the loans fully collateralized, and how do you ensure you avoid the issues from the last cycle?
Yes. So great point, Ram. And we can get into, how we navigated 2022 versus when others didn't. But we do have a custody loan, what's called a custody loan. So that loan does not get rehypothecated. The assets remain in custody at all times. That has been, not surprisingly, our most popular loan product over the last 2 years or so. The other thing that Ledn does very differently than the others is that there is actual ring fencing of the risks of the products that contain credit risk. So for instance, in our growth accounts, our Bitcoin growth accounts, we take Bitcoin from people that want to earn interest. We turn around, we lend that Bitcoin to institutions. With any lending product, there's always a risk of non-performance or a risk of default. So at Ledn, the growth accounts are designed such that if there is a loss in that lending activity from that growth account, the loss gets contained and absorbed by the people participating in that account. There is no obligation or there is no risk, I guess I would say, for Ledn to have to, absorb or not be able to absorb the loss and then have the whole ship sink, which is what effectively happened with Celsius and BlockFi and others. So at Ledn, all of the risk products that have, all of the products that have credit risk are ring fenced from the products that aren't. So for instance, our clients that are taking our custody Bitcoin-backed loans would not be exposed or would not suffer if there was a loss in the Bitcoin growth account side of the house. So in that sense, they're very different because back in the day, these companies had no separation. The people that were 20x long on Shiba Inu were in the same bankruptcy line than the guys had had Bitcoin on custody. And I think broadly, what I would say is a lot of the companies that failed in the past didn't fail necessarily because of what they were doing. the taking collateral and keeping it safe and lending you cash can be done pretty responsibly and pretty simply. It's when you start adding, it's really on how they were doing it. To your point, they were rehypothecating to no end. They were not disclosing these things to their clients. They had tokens on their models. They could do all sorts of financial engineering. They accepted assets that have very little liquidity and no demand on the institutional side. So that just creates layers upon layers upon layers of excess risk that you don't really need if you just want to do collateralized lending.
Great. Last question. Do you have a third-party admin on the custodied loans to validate that they're fully collateralized? Or do you have some on-chain mechanism to ensure that loans created match receivables, the assets?
So great question. So we have a few things. So we have proof of reserves. We were the first lender to ever do proof of reserves. We do them every 6 months with a certified public accountant. So all of our clients can see the report when it's produced, and you can see that we reported your liabilities to the penny and to the Satoshi to the accountant. And basically, based on the liabilities reported and the assets reported, the accountant confirms that there's enough assets to cover our liabilities. So that's on the one side. On the custody loan, there's a legal representation in the legal agreement that neither Ledn nor our funding partners have any right to do anything with that collateral to further rehypothecate it or lend it into the market. I want it. So our goal is to get that proof to be on chain. That's something that we're working on, and we hope to be doing this or announcing this towards the sometime in next year. I'm hoping sooner, closer to the beginning than to the end. But this is something we're working on actively, and transparency is the way forward here. That's always been our premise. And if anyone's going to do this, you can trust it's going to be us.
Awesome.
Mauricio, what can you tell us about the growth you've seen over 2024? I mean, not necessarily numbers, but from which segments of the market has it come?
So lots to say on the growth for 2024. 2024 has been a phenomenal year for us. It's been a banner year. Every month has been a record after record. Last month, we had our best month ever. This month is on track to far surpass November. To give you some sense of the numbers, up until mid-November, we were originating around $1 million per day on loans for our Bitcoin-backed loan clients. Since middle of November, that number is closer to 2.5, 3 per day. So it's dramatically increased. I think the growth is really coming from everywhere. There has been a huge surge of demand from the US. I would say the US has been a very massive market for us, and it's getting, it's gotten really big over 2024. As far as use cases go, we are seeing a lot of loans go out to purchase real estate. I think a lot of Bitcoiners bought the original stack with this goal of Bitcoin reaching 100K and buying their dream home. It's there, and now they're going out and buying the home without having to sell the Bitcoin. We had people that took out loans back in 2022 to buy houses. They've seen the collateral grow to surpass the value of their initial purchase and then some. So they're very happy. And I guess what we are seeing is demand from two sides. One, the OG holders, or the holders that have been at this for a few years, realize the value of maintaining the Bitcoin for longer, and they want to access their wealth, and they're buying, and they want to buy their home. So they're coming in and they're taking a Bitcoin back loan. The new people that are coming in not for a trade, but for a long-term investment. And knowing that they can access these loans gives them more conviction to enter into those positions. And a lot of times they go into those positions knowing that they're going to want to use those loans from the outset. So they use us to effectively have their cake and eat some of it too, if that makes sense.
And that does. That's fascinating. You mentioned earlier that you were focusing back in the early days on miners. What are they doing these days?
So miners are interesting because not every miner has access to public debt markets. So you're seeing the markets, the publicly traded miners are effectively trying to do or recreate a similar flywheel than MicroStrategy has been doing. They are being rewarded by holding Bitcoin on their balance sheet more so than by mining it themselves. So it's almost like they're trading like an ETF plus an operating company, 2 in 1. But the miners that are not blessed, I guess, with public market access still have financing needs, still see value in holding their Bitcoin long term, but they can't issue a bond. So they will come to us to upgrade equipment. They will come to us to, meet payroll, meet expenses. And it's not just them. We work with a number of publicly traded companies in the Bitcoin space that use us for managing their treasury. So we're seeing a lot of companies for treasury management, whether it is to pay for expenses and keep the Bitcoin, or to take out loans to buy more Bitcoin. There's all sorts of flavors to that. But I guess the underlying trend is those who have Bitcoin want more of it, and those who get paid Bitcoin don't want to sell it. So it's been pretty virtuous. It's really coming from a lot of places. The miners themselves, the majority of the loans for them come for equipment cycle, upgrades, and for operating expenses.
And the fact that they can finance with that, get liquidity with that, means that there's less sell pressure in the market, which is probably relevant, could be relevant to what we're seeing now. Earlier today, Bitcoin broke through $107,000. I should say that we're recording this on Monday. Who knows where it'll be by the time you listen to this. Alex, what do you think is mainly driving this fresh wave?
The Trump trade. Nothing has changed, actually, since we talked the first time, I think. It's more of the same. Trump, regulations, Sailor. I mean, one thing is him saying he's going to be doing something, and a different thing is actually him doing it, right? And over and over and over again. But it's pretty much that. The fascinating thing is that here we are at 106K. Yeah, 106 right now. And it's pretty much, it feels the market is not very levered right now. It's been spot driven pretty much in the last move after the flash out we had a week ago, right? So yeah, more of the same. It's the Trump honeymoon. I mean, and some people may be concerned that things are too vertical, but when things are so good, they're supposed to be vertical. I mean, just look at Tesla. As you see anybody like freaking out that Tesla is about to drop 30%? No, it just 2x because of very strong fundamentals and a fundamental change. Yeah, what do you guys think?
Yeah, no, I agree. I think MicroStrategy's inclusion to QQQ is a big one. Also, we talked about that possibility last Monday. It happened Friday after the close. The S&P committee announced that would happen. So that's a big driver. The other part is The Economist threw in the towel Sunday. Last night, there's an article they published that was constructive on digital assets. And
oh, no.
Yeah.
That's a red flag.
It's kind of funny. I should post this. I'll share my screen in a second. You can see it. But almost to the 5-minute mark, this thing started lifting off after this Economist article. So it was at like 5:19 p.m. Eastern time yesterday. So, Alex, when did Bitcoin take off last night? It's around 5.
It was after.
Okay, I think it was around 5.
Yeah, so maybe the curse is lifting.
It hit the all-time high at 12:30 in Europe, so it would have been 6:30 ET. That was when it broke through 1,005, I believe.
All right, it's about an hour after that.
105,000.
So The Economist capitulated, yeah. So thou shalt not talk about The Economist henceforth.
The what now? Yes.
There's a fun study that was done by someone called Brett Connolly, like an old-time FX trader, very good. And he's been since 21, he's been tracking the signal of basically the Economist articles, and it's very consistently contrarian. Basically, you fade the Economist. This is, I'd say, everyone out there, it's good stuff. Well, look it up. Brett Connolly, The Economist, should come up.
So does that mean that this is it for Bitcoin?
I think The Economist is not that decisive. I agree, by the way. It is Trump bump. It's not just Bitcoin. If you look at the chart of Tesla, it's the same phenomenon, very correlated. And the buyer base and the buyer psychology are very similar, right? This is one big animal spirits trade. Now, Tesla and Bitcoin weren't actually correlated up until the election. So you can see here, November 3rd, that's where you have the election, and then both of these rip. So, it is interesting that the funding rates are stable. They haven't looked where they are now and at all-time highs in weeks. So it's actually much more constructive than we've seen in some time. And I think we'll get a Santa Claus rally now through year end. So I brought my Santa hat here. Santa Claus rally officially started today. So We have snow on the ground here in New Jersey, UFOs in the sky, and Santa Claus with his reindeer somewhere flying overhead. But yeah, it's it's good seasonality. I guess my quick view would be that probably in the early new year, we'll see. I think you could get folks that are pushing taxes off to the new year. So it's interesting. We're in new territory, and exciting to see what Bitcoin does from here.
As a European, when is the cap gains cutoff point for 2024 US taxes?
It's 12/31.
Okay, so any selling would be done before then, so we could see a pullback in the remaining days.
People are definitely kicking off sales to the extent they are able to do so to the next year. And I also hear people saying they're waiting for Bitcoin at 125. It's another comment. I hear another level at 150. So, and then you have level 250 or et cetera.
How much should we worry about portfolio rebalancing?
I think it's a significant point that you're making there. I wouldn't be surprised to see a mean reversion kick in the new year, because you're also going to have the end of tax loss selling that takes place, right? So the last week of the year, people are going to sell whatever isn't working, like energy tanker stocks, for example. What was that, Alex? What's not working? Solana. So they're going to sell whatever's not working, and then I think in the new year that gets a bid. So you could see a rotation or like a worst to first dynamic.
Mauricio, what's your view on Bitcoin heading into 2025? You who are actually lending money to Bitcoin holders, do you think we're in for another 12 months of upward run, or do you think the Trump factor will start to ease off once he actually takes office?
I think it's going to be a grind up to 200, 250. My base case is 2025. It's just going to be it's hard to tell exactly when, but my view is that it's going to be a consistent grind. I think there's way too much pent up progress in this industry that hasn't been reflected in price. If you think back to the last 4 years, there's been Operation Choke Point. There's been an SEC that's been not necessarily the friendliest. And this industry has gotten to where it has gotten with ETFs and such, with really a bunch of headwinds. And now you have removed the headwinds and potentially replaced them with a tailwind. So my base is that even if you just remove the headwinds, you're going to have a massive repricing just because there is no looming threat from the powers that be in this industry. And I think people's animal spirits, which have instinctively seen the progress in the future of this, they had been sort of neutered and kept back by force. But that sort of the bad cop is out of the room now. It's okay to have digital assets. BlackRock has them. Paul Tudor Jones has them. The government of the United States is looking to buy it. It's now, in the past, you could have passed off as a conservative registered investment advisor if you told someone not to own Bitcoin. If it's in the treasury of the United States government and publicly traded companies, you're not conservative anymore. You're just out of touch. So that would be my 2 cents.
And the career risk moves from, rather than actually suggesting something as risky as a stake, it's suggesting not having one. I was watching today a video of the former German finance minister, Christian Lindner, berating the German government for not having a Bitcoin policy. And we've talked on this show before about the contagion effect. I think we're starting to see that seep through now. We are going to be seeing this discussed at nation-state levels increasingly going forward. Mauricio, you mainly focus on Bitcoin loans. You have some ETH activity as well. Have you been getting requests for loans backed by other crypto assets?
We do get the request here and there to support other crypto assets. We have been very clear from day one that we don't look at what other lenders before us in the 2021 era ran to these new assets because it's a quick way to balloon your assets on platform and to get the fan base from those new projects. The issue is that these new tokens oftentimes have no liquidity and haven't really been tested or gone through a cycle. So the short answer is yes, we have gotten demand, but we are obsessively focused on the assets that we support. We supported Bitcoin since inception. Ethereum we added late last year, and it was really because it was ample liquidity. It was regulatory. There was a lot more clarity. The ETFs came online, and the Celsius bankruptcy clients needed us to support Ethereum to bring a lot of those clients over to Ledn, because it was the only other supported asset that the bankruptcy court allowed to refinance. So the way it worked out back then was if you had Bitcoin at Celsius, you could get a Bitcoin backed loan at Ledn. If you had anything else backing that loan, you would get ETH. And so if we didn't have ETH, we would have left a lot of those clients behind and forced them to go to other places that they didn't really want to go to. And so we did it because, again, we got comfortable with the risk profile of the asset, and also it made sense for the Celsius opportunity. So that's what we do. But we do get requests. The answer is we're not rushing to explore or add any new assets as collateral. I think there's a very clear future for Bitcoin as a reserve asset and very clear reasons not to sell it. I don't think that's there yet for most other assets.
When it comes to other tailwinds for Bitcoin, let's focus on that one for now. Alex, what's your take on the macro push? We have 22 central banks announcing decisions this week alone. 22. Most of them are heading down. There are a couple that might be heading up. But do you think that is priced in already, or could we be still seeing some liquidity push from the monetary side?
I think things are very good, to be honest. Balanced labor markets, cooling, not too much. Even the Fed, even Powell is saying this very explicitly, which is rare. I think it's very hard to predict a recession too far out. It's actually it's impossible. It's been shown statistically that there's no edge in predicting recessions very far out. So for something bad to happen, we need a trigger. We need a major trigger. And in the meantime, is like what Mauricio is saying on the Bitcoin side, a crawl up is more likely. Like, let's see VIX go down all the way down to 10. People tend to forget that actually equity markets, they tend to just go up for very extended periods of time, driving people who are not positioned crazy. That's what I think is happening, and Trump laps equity markets. So I would expect him to make things even better. That being said, like, for me to get concerned, what I was saying is I need a trigger. I cannot foresee anything going wrong unless a trigger happens. A trigger could be very specifically Trump, his administration going very hard after immigrants. I don't think that's going to happen, but if that were to happen, that would be very bad for the economy. It would basically bring growth down, would bring inflation up, and it would be something that we do not want to see. It's not being priced in. So if talk on that front ramps up very aggressively, that'd be a good signal to basically take some cover. And on the equity side, and Bitcoin now is heavily correlated. That's part of the MicroStrategy Trojan horse, right? And now we're forcing, or not we, it's the market is forced to add to Bitcoin as indices go up passively, right? So yeah, sorry, nothing in the horizon that truly concerns me. My concern is squeezing this trend as much as I can. Yeah.
Spoken like a trader, for sure. Ram, what's your take on the dollar these days?
Well, we'll see. I mean, Trump's got a strong dollar policy. Besson has a weak dollar policy. He hasn't come out and said that, but that's how he thinks. So harder to get a view on the dollar. We'll see how it shakes out. It's on the high side right now. So, I'd expect that it cools, but I don't know that I have a strong view on that. We'll learn a lot based on the Fed's commentary this week. I think Alex's read is accurate, same as mine. I think that the left tail risk I would put out on the table is if inflation makes a comeback in the second half of next year. I don't want to say making a comeback in the first half of next year. Inflation is cooling, but I do think there's a real risk it is sticky. I mean, we still have numbers with the 3 handle on them. So if the Fed decides not to do anything about that, that's very bullish. If the Fed, on the other hand, says, gee, that is uncomfortably high and inflation expectations are ratcheting higher and they are moving higher, then that would be the left tail risk for the market. But overall, companies are growing earnings. You're not seeing job layoffs. That's the number one marker of a recession. We haven't seen tariff policy implemented yet. We've seen it used as a bargaining tool. Tariffs on Mexico would create higher prices for automobiles, which is a big chunk of U.S. consumer spending. I think Trump actually is negotiating pretty well, to be candid. I mean, he's got everyone guessing, and he's got good economic policy people, and he's, to a name, has picked very good people in each position. So the main thing to watch out for next year is just inflation in the second half, and how does the Fed respond to that?
Inflation in the US, we also have to worry about inflation elsewhere because, after all, Bitcoin, while the US is easily the driving market here, Bitcoin is a global asset. And if you're worried about depreciation of currencies in somewhere else, for instance, India, Nigeria, Turkey, for sure, then that does boost demand for this particular digital gold, as it were. But a high dollar does squeeze global liquidity, which in theory should be a headwind. And yet we are seeing Bitcoin, despite the high dollar, reach new all-time highs. So some kind of correlation is broken here, which is particularly interesting. It comes down to what Alex was saying. The Trump trade is the driving narrative now. It is wiping out any concerns about tightening liquidity given the strong dollar.
Here's another consideration. Everyone wants American assets, right? So S&P, QQQ, Mag 7, Tesla, up, 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 and up. China, down. Latin America, Mexico, Brazil, down, down. Europe can't grow. So, and now Bitcoin is an American asset. Bitcoin mining is an American policy. So it is really interesting what Trump has been doing the last few weeks. I mean, he's acting as executive in chief before he's even in the door. He rang the New York Stock Exchange bell. By the way, he rang it to the day when positive seasonality starts. I don't know if that's luck or not, but like whoever the hell is choreographing what he's doing well is like incredibly impressive. And the other thing to keep in mind is we now have the Trump put. Forget about the Fed put. We have the Trump put. What do I mean by that? So Bitcoin drops to like 93, 94. Then Don Jr. comes out and said it's going to 1 million. You guys remember that last week? That's the Trump put. When this thing drops, you're going to have some announcement from someone saying something in the Trump orbit. So dips should be bought. The trend is up. The funding rates are key to watch, and they're actually clear now. Like the last few weeks, I've been fading numbers over 100,000 because every positive news event was met with selling. Paul Atkins nominated, pump, sell. SEC Chair Gensler terminated, pump, sell. So whales were selling into that. That hasn't happened this time. So it's a new setup in the market now.
Could be that those that would have sold at 100K, because many people did have that psychological target, they're done. They're out of the market.
That's psychology is broken now. I agree.
Yeah. Now, there are some distributions hanging over, but are they insignificant now? We still do have the Mt. Gox distributions, and I believe there's some news on the FTX distributions, which will be decided beginning of January, but not distributed until some time later. Mauricio, what's your take on the FTX news?
Yeah, happy to chime in on that because, like I was mentioning earlier, we did help with the Celsius distributions, and we did see some client behavior after everybody came out. I'll answer that, but then I want to come back to Ram's point because I think it's very accurate on the sort of dollar emerging market dynamics. But just to stay on the FTX distributions for a second. So when we did the Celsius distributions, we brought in a bunch of Celsius clients that had loans at Celsius that wanted to continue those loans at Ledn. And what we saw was that these clients they were basically boxed out of crypto or Bitcoin for a few years when this whole process was going on. But when they got their Bitcoin back, they went right back to it. They are actively managing those positions. A lot of them told us they're taking more loans to buy more Bitcoin. A lot of them took some of those proceeds and basically took out loans with us and then went and levered long things like MicroStrategy, filled their hole completely. So it's been super interesting. And I guess what I would say is these people are not going to be held back. Once they get that money is going to come. A large part of it is going to come and get redeployed very, very quickly. I would say the ratio of people that were scared forever versus the people that came straight back was something in the order of 90-1 or 90-10. 90% of people continue to act and basically actively involved in this space, taking out more loans to buy more assets. I would say 10% of them took their loans and repaid them shortly after and said, I'm done. But the large majority of them continue, and they're some of our best clients today. So they're going to get active. They're going to get active again. The point I was going to make for RAM in terms of dollar versus EMs, that's my base case. My base case is that the United States is going to be a black hole of capital, and you're going to see a lot of historical correlations break because you're going to see a strong dollar with rising equity markets, and people are going to be scratching their heads saying, where's the money coming from? But it's actually all the debasement and excess deficits from everywhere in the world finding their way back to the US dollar and US assets. And to Ram's point further, Bitcoin is now a US asset. You would be shocked to learn that very few people in the world can actually buy S&P, can actually buy QQQ. They cannot buy NVIDIA. Bitcoin is the closest thing to the S&P 500 that most people have around the world, and they're going to go to it. So I expect a lot of correlations to break over the next few years.
I'll add one data point for you there. So there are closed-end funds, say, trading in Hong Kong that are indexed to American securities, and they trade at a premium to NAV. It reflects the demand for American security. It's the flip side of the trade deficit, by the way. That's the capital account surplus.
Right. It comes right back to America by way of capital account surplus, 100%.
And it does make Bitcoin the easiest way for anyone in the world to participate in the Trump bump.
Correct. It is the way for the world to play the open America or America's open for business again trade, because they can't buy Tesla.
Okay, so that brings us to China. Now, China's currency is going to be weakening against the dollar because the dollar is going to keep on climbing against pretty much everything. And this is going to suit China just fine because it'll help them offset some of the tariffs. And there has even been talk about China perhaps trying intentionally to devalue its currency relative to others. But then what does that do for the Chinese liquidity outlook? And what impact could that have on crypto markets globally? CZ, I think, or Cointelegraph was reporting, I think it was today, that CZ said on stage recently that he thinks it is inevitable that China holds a Bitcoin strategic reserve sooner or later.
On China, I'd like to say that it doesn't really matter for crypto much. It only matters on the margin. It's been the case for quite a while, and it's thrown people off already twice this year. We had very large moves in China. It doesn't matter. It's really marginal. It's the same thing. It's a correlation that people expect to be there, like the dollar one that you were talking about right before, right? That people think, okay, dollar app. Everything should be going down, and no, it's not the case because it's a Trump trade. It's make strong America, capital inflows, exactly what you were saying. So it's a similar thing happening here.
Yeah, look, there's China, the sovereign, then China nationals, Chinese residents, and the two different behaviors. China, the sovereign, I just don't see them buying Bitcoin. They're going to buy gold. They have been for 2 years. They're going to bid for gold. And they've been doing that instead of buying U.S. Treasury bonds as the trade with the United States declines. I don't see that changing. By the way, I've tried to figure out what is the optimal asset to trade with aliens. As far as I can conclude, it's gold. For what it's worth, I think the only answer is gold. Maybe China's got an edge on all of us on this gold trade. I don't know. China long gold. But this is an interesting chart. This chart shows China yields in free fall, which means bond prices are getting bid up. That's a flight to safety. This is a kind of a panic move that's happening. So I want to keep an eye on China. Like China nationals like digital assets and Bitcoin, not just because of the speculative properties, but because you can move money. And there's a cap on the amount of money you can move out of the country. And with Bitcoin, there are ways to move money around without having to go through traditional channels. How much of that's moving through Bitcoin? I don't know, but it's an interesting hypothesis, right? About 5 months ago, I remember seeing this image from Chinese mainstream press of people buying gold bars in China. That was their flight to safety when the mainland indices were crashing. And that was actually a capitulation moment. The indices had bottomed within 7 days of that event. They were buying gold. Is it possible that they're buying digital gold too? I don't know. It's possible. The Chinese government, I just don't see them doing this at all. They're trying to do BRICS. They're trying to do anything but the U.S. dollar. They don't want to do anything American-led. They want to be in opposition to the United States.
I agree with that view, Ram, and I think to your point, I've always seen as a Venezuelan, when you don't agree with a lot of your government policies and you try to basically vote with your wallet and reposition your assets, the first thing the government tries to do is shut down the gates or prohibit where and how much you can take. China has been doing this for eons. Most people that have traveled there and tried to buy or sell a dollar as a tourist will know this. And the Bitcoin is really the vessel for them to transport the capital. And I use the university index, which is don't look at money wants to go where people send their kids. And if you look at wealthy Chinese entrepreneurs and all their kids, where they go to school, they send them to US schools, they send them to European schools. That's where they want the majority of their assets to be. A lot of times there's friction, artificial friction for the assets to get there, but nature finds a way. We are a resourceful bunch after all. And Bitcoin tends to be that vessel. It's the best vessel to do so. And I think you're going to go into this very frustrating period for central bankers and macro people because you're going to be printing all sorts of stimulus. You're going to be trying to do all this yield curve control, but all that stimmy money is going to filter right out and into Bitcoin and into the US. So it's going to be a frustrating few years, I think, for Chinese central bankers and most people in East Asia or even emerging markets in general.
I love that quote. Money goes where people send their kids. That's a wonderful, wonderful quote. It makes so much sense. But to put that on a wall, I'll add one point to that, a little anecdote that supports your thesis there. But I have a friend whose family emigrated from Iran. She was young, but her parents, they were merchants. They sold their business. They sold it for jewels, emeralds and and they stuffed the jewels on their person, like in headdress, all the rest. And they scaled the mountains, crossed the borders. Like the equivalent of that now is a USB stick loaded with a Bitcoin seed phrase or something, right? Right. They probably memorized that. They're like, okay, how do you spell the word caught or whatever it is? What's the right spelling of every word? Make sure everyone in the family knows it.
Does anyone have eyes on the alternative market for the RMB exchange rate? Because there's the government exchange rate, and most places that have a government mandated exchange rate, there's also a free market exchange rate that usually trades at a very different level. And so that one to me is always signal. And I'd love to know where that is for the RMB.
That's the dollar CNH. But I do wanted to say, actually, I have to disagree with you guys. I don't think that Bitcoin is used normally for basically getting money out of China, and the way I see this is basically by seeing an absence of a premium on basically Bitcoin trades in OTC markets in China. So you can see basically quotes of Bitcoin against RMB, and you adjust by exchange rates, and you're gonna see that there is rarely ever a premium. So that tells me that the money flows out of China are actually through Tether or some other means. I don't know, but not Bitcoin.
Yeah, I've heard that anecdotally as well. They do see Tether as a better store of value than Bitcoin because it's easier to understand. Everyone understands dollars.
Right. Just to be clear, I don't know whether they're using Bitcoin or not as a way to move capital out of the country. For sure, they're thinking about it. I love the point Mauricio made around nature finds a way. Like the creativity is going to be in everyone's head. Whether they use it or not, they're going to assess that as an option. The local exchanges in China, that's difficult. I've talked to people in China where they have reports of entrepreneurs that run crypto exchanges being placed under political pressure by their local municipality to generate revenue for the state. So it's like, hey, hand over your crypto or you go to jail. So they might not want to move money via an exchange. And plus it's going to have controls and surveillance and all the rest. So I don't know. I think it's an interesting topic. I'd love to learn more and talk to people that have better expertise around this topic.
Yeah, that'd be great to have a guest who actually is from mainland China and has spent a long time there, because it's a unique market, right? We can only
Emily Parker might be a good guest. I don't know if you guys run across Emily.
Yeah, well, I met her.
To further on your point, Alex, so that was true in Venezuela. When Venezuela was taking their money out to Colombia via Bitcoin, you had a premium in Venezuela, surplus in Colombia, and many people were trying to ARP that, and that was very clear on local Bitcoins and other types of markets. The one point that I'll make about China P2P is that they have a hell ton of miners there that are buying local equipment to basically build up and mine and use the electrical subsidies to basically recycle that into more Bitcoin through a manufacturing base that we didn't have in other places. So they might be more willing and ready sellers. But I'm not the expert. You should bring a Chinese expert to discuss this. But I agree with your art point and that being a signal to see where money's coming out or into.
And then again, we should remember that even small numbers in China are pretty big numbers. So they can still make a difference that way. And not long ago, a senior official of the PRC said on stage that he thought he wasn't speaking on official capacity, but he said he thought it would be a good idea to bring crypto exchanges into the light, I think was the phrase he used. He acknowledged that trading is happening and they would like to make it official. So I wouldn't be surprised next year to see China start to talk about licensing crypto exchanges. And we talked about that before here. I think it's very similar to what Nigeria did. Try to pretend it's not happening. Eventually you can't pretend it's not happening anymore, so let's try and control it.
Look, their instincts are CDBCs and state-sponsored crypto. I mean, they would try to find some alternative Bitcoin that they control. We'll see. Look, I'd love for that to happen. I mean, that would be an extraordinary Trump foreign policy victory if China actually got on board with Bitcoin. That's facing their 99 little balls winning.
Although it could affect the Bitcoin strategic reserve support, because why would he want to help benefit an asset that would also help some nations that are not so friendly?
If the United States is front running every other country,
that's true.
I mean, that's a pretty big. That's like the U.S. dollar is an example of that, right?
My view on this is, again, I always see Bitcoin as a vehicle to allow capital to go from where it's being forced to be to where it wants to be. And a lot of capital wants to be in the United States, wants to be in North American markets with the assurance that comes. The United States is, I think, doing something really smart, which is by embracing Bitcoin and forcing other countries to embrace Bitcoin, it opens up the rails for that capital to move to where it wants to go. I would be hard pressed to see a country like China or a country like Iran or a country like Venezuela go and regulate Bitcoin, because the reason people are using Bitcoin in many cases is it's exactly to take capital to where it wants to be, which is effectively what they're trying to prevent. So I think Trump is basically, or the US is calling everyone's bluff and saying, let's go, let's do this. And everyone else is saying, oh, okay, well, and they're going to be there. It's a forcing function for capital to get unlocked from where it's trapped and go to where it wants to be.
It's fascinating. I mean, Trump can essentially rug pull all these other emerging markets that are trying to control the capital flows of their people by embracing Bitcoin and digital assets. It advances American policy.
America first, right? Now, moving on, I want to drill down a bit more on the MicroStrategy inclusion in the NASDAQ. We've referred to it a couple of times already so far in the conversation, but it's worth some detail. And I've heard, we've heard it referred to as a Trojan horse. Alex, I think you said that it does mean more people will be buying Bitcoin. Can you talk us through your thinking on that? What's the impact of MicroStrategy joining the queues?
Basically, anytime anybody buys the NASDAQ, either via ETFs or mutual funds or futures, you're literally buying MicroStrategy, which basically, by definition, what it does is it enables Sailor to sell more shares and
to buy more Bitcoin. So it's an indirect effect.
Yeah, it's simple math. I mean, at some point, this is gonna break and it's going to stop working, and it works also on the other way around. Not in the exact same way, because Sailor doesn't have to sell if MicroStrategy goes down, unless it goes down too much. But you could guess at some sort of similar dynamic. We would see some sort of similar dynamic in a very strong down market, because traders would trade as if Sailor were forced to sell, even if he's not. Potentially, in a very extreme case, making it a self-fulfilling prophecy. In the meantime, that's very far off. But it is as simple as that. It's a Trojan horse. It's exactly the whoever came up with that analogy for this case, it just hit jackpot. It's exactly what it is.
And what would turn that? What would make it turn?
A bear market, like an equity bear market.
The end of the cycle.
Yeah. Let's say VIX 240.
It was always correlated, though. Wouldn't you say, Alex? It was always correlated to equity beta.
Yeah, but it's increasing, and it's basically is this going higher and higher. It's also it's only been correlated since March 2020, right? Not before.
Right. Well, I would say, as markets become integrated, and prior to that, I'd call it, these are segmented markets. As markets become integrated, they become correlated, and correlations only go one way.
Exactly.
They'll go up.
This is what the super cycle means, and it triggers a lot of people because when people hear super cycle, they hear Suju in 21 saying, up only, and we're going up, and then everything went to shit, right? So it has some sort of like emotional impact. But this is what it is. This is what a super cycle is. Super cycle is that Bitcoin goes up with equities for fundamental reasons.
So I'll drop a nugget for you all here. So I've got to update this chart. This is MicroStrategy. These black lines you see on the chart, those are option expiration dates. They happen third Friday of every month. The reason why they're worth looking at is because MicroStrategy has very active call and put option buying market, and so does Tesla, by the way. So if you want to trade Tesla, you got to look at these things too. And generally what you see is the week after options expiration, you see a move in the opposite direction of what's kind of happened preceding to it. It helps the dealers do their job better by wiping out positions. It's one way to interpret that phenomena. So, that's I think two key dates to watch for in MicroStrategy would be 3 to 5 days after options expiration. That's one. And then, the week into the new year, we'll see how things go. There's a question, is it a sell the news event? MicroStrategy was down today. The markets were up today. Bitcoin was up today. Now it's flat. Depends what timestamp you're looking at here. I think overposition is a reason for corrections too. It's not just equity correlation. If everyone's overpositioned and no one's left to buy, you can get, a bit of a flush. The lack of leverage, as Alex noted in the spot market, that is constructive for the spot market. Now, that's not MicroStrategy, though. Those are two different, obviously, assets.
And Ram, you said 3 to 5 days after options expiry. Why? That's
usually when you see that phenomena play out. Just empirically, it turns out to be the case. That we'll see if that happens this time or not. But I don't see the reason why it wouldn't be the case, though. Just from other things I'm looking at, it seems like that could be the case.
Any potential impact from the additional institutional coverage? I mean, now any analyst that follows the QQQ is going to have to get their heads around Bitcoin. Does that, or is that already the case? Does everyone already have their heads around Bitcoin?
That's a really good point, actually. You're right, because they all have to have a view on MSTR now. They have to have sell-side research coverage.
They have to understand Bitcoin.
And they're all going to get confused because of the premium to NAV. They're not going to have buy ratings. I'll just put it, flat breaking news, everybody. Okay. They're not going to have buy ratings because they're going to say, hey, there's a premium NAV, and they'll have neutral at best. Something like that.
And one more thing I want to cover before we get on to the wrap up of the year, and that is stablecoins. There's been some big stablecoin news this week. Ripple has had its stablecoin approved. Supposedly it starts trading tomorrow. Revolut is in the wings, ready to go, just waiting for dotting the I's and crossing the T's on the approval. There's Athena is up to interesting things as well. Does any of this have any impact on the market itself, or is this largely corporate positioning?
No, they move. I mean, XRP moves with Ripple news. I'm personally, I think it's a great asset to hold. Ironically, historically, we have said exactly the opposite. But especially now with the cool down that we had, I think it's a great asset to hold. It's kind of like combines the both institutional narrative and developments with what, with all due respect, what we call the normies. They have the famous XRP army is a very large number of people that are obsessed with XRP, and they think they're going to replace it's going to replace Swift, etc., etc., etc. And yeah, Athena is a great asset as well. Is what they're doing is fantastic. It's a perfect bull market asset. Does that impact Bitcoin? No, I don't think so. I don't know if anybody would disagree, but I don't think it impacts the greater market. But individually, they have the Bitcoin beta, and they have basically those particularities that are very good for each of those. Word is, by the way, ENA is going to get listed on Upbit recently, and also you had the Trump buying some ENA, which push it higher over the weekend, basically.
Alex, real quick question. What's your kind of 1 month view or 2 week view on altcoins where we stand today?
Well, we have to separate Sol and the Sol ecosystem with everything else, right? It's on Sol specifically, I think, is the reason for the underperformance. By the way, so let me backtrace a little bit. Historically, when we talked altcoins, we used to think ETH, and everything moved in line with ETH with a beta. Now the market has gotten very, very much more complicated, where you have all these buckets of assets that they trade some sort of in line with Bitcoin in a way, on and off, but they definitely don't trade in line with other ones. So we have the Alt L1 trade that goes in and out. We have the ETH L2 trade that goes in and out. We have the DeFi that basically has been going up a lot because of re-rating, based on the expectation that they finally will be able to turn on the revenue share switch on to make the assets more valuable. Then we have the entire Sol ecosystem. Sol has been doing very poorly. I think people talks about these unlocks coming up in January. I think it's more about a combination of just like it's been a poorly performing asset. So when the year comes, you need to take some profits, or some people do need to take some profits to prepare for taxes, right? What are you going to sell, Sol, or are you going to sell XRP? Well, I'm going to sell Sol, also going to realize less taxes. So I'd rather sell Sol than XRP, where I may be up like 5x, you see. The other thing is there's been a large move from Sol to Base, driven by virtuals at the beginning, virtuals AI, then to Arbitrum for Hyperliquid, or to Hyperliquid more specifically. And if you look at the hype chart, which is the asset of Hyperliquid, is literally up only. Is like the Tesla one, but even more, or it's like the Bitcoin one, but even more vertical. It's a great product with very good narrative. It's crazy. Like everybody's talking about it now. If you pop it up and you go at mind share of tokens, you're gonna see that it's Bitcoin up here, then Sol and ETH right under at like say 8% each, and then at 2.5-2% is hype, and then everybody else. And it's a new token, so it's quite remarkable. But yeah, you have that separation between. We have to separate, and then you have the large cap memes, we have the small cap memes, and so on.
Alex, what's your take on ETH these days? What's your outlook?
ETH is good. It's a perfect Trump trade. It's basically
DeFi.
It's DeFi. It's what the Trumps are buying. I mean, they're buying. It's not the Trumps themselves, right? It's World Liberty Financial. They're buying ETH DeFi. I mean, I prefer Bitcoin, but it's good. Like at the end, as everything goes up, so people get obsessed about these fights. And it can be very, very stressful if you're all in one asset. But if you're diversified a little bit, doesn't really matter. Of course, if you're sitting on ETH and the alternative is something that goes up 10x, well, that's a different story, right?
Yeah.
like
Risk tolerance.
XRP, Cardano. No, it's about like Jesus. It's like I only made 50%. Everybody else is making 5x. I want to kill myself.
Well, I think one of the interesting takeaways from that is, and this applies to the equity markets too, is having exposure to a number of assets that give you potential for right-tailed outcomes. Now, it's important to reject assets quickly because most assets aren't good assets. That's true for the equity market, true for crypto market. But there are a number of assets that meet certain standards where you have the possibility for right tail outcome. And it's hard to know in advance what asset that could be. They have this potential, and having some exposure can open your portfolio up to that potential.
Well, I have a slightly different take on the stablecoins view. I think, you know, I don't have an informed view on XRP, on Sol, or all the other things. I think, you know, everything from smoking chicken fish to XRP is ripping because, you know, there's going to be better regulation, and the XRP guys are probably, you know, thinking they're going to get an ETF. And to Alex's point, there's an army of people that made a ton of money, and because of that, they're just, you know, paid shills or whatever you want to call them for the token itself. But I think the fast dash or the mad dash to stablecoins is coming from the fact that people are seeing that the U.S. has woken up to stablecoins. They help them advance U.S. interests, basically perpetuate the U.S. dollar, and they're going to buy their treasuries that nobody wants to buy right now. So they're going to push and promote stablecoins to no end. And everybody was going to want to be on the receiving end of that. And, you know, here comes Ripple, here comes all the other guys. But I think economies of scale are going to become, or network effects rather, are going to be much more important for stablecoins as they reach sort of mainstream. And so I think, you know, the main one, obviously, USDC being forefront for being pro happy regulation. I think Tether just got into the good books now with Ledn, being part of the Commerce Secretary. So I think you're going to be in a really tough spot if you're a stablecoin next year and you're not one of those two. And I can bet those two groups are going to be doing everything they can to get the flying eagle of the U.S. and to be able to perpetuate the dollar everywhere around the world.
And the base for innovation that delivers. That is a very uplifting note on which to end 2024 for Bits and Bips. But before we go, I want to have a wrap-up round. I want to ask each of you to share what you were most surprised at in 2024 and what you are most excited about in 2025. Mauricio, special guest, you go first.
So I was most surprised this year by the fact that we went from old yellowing two banks in the US that were basically supporting the entire industry to fully pivoting to supporting ETFs and now talking about Bitcoin Strategic Reserve. I have never witnessed a more extreme 180-degree turn or view on an asset that we witnessed this year. And what I'm most excited about, you know, selfishly, is this idea of not selling your Bitcoin as a reserve, hold it for 20 years. You're going to look to do whatever financial service you can instead of selling. And that's where we come in.
2025, the year of hodling, right? Ram, how about you?
Well, double underscore what Mauricio said. I mean, the 180 degree from 2 years ago with the demise of FTX and Genesis and, you know, Elizabeth Warren's anti-crypto army, all of that, just the remarkable amount of blowback that happened, not just in the asset scene, but also in the political scene, is extraordinary. And also the follow through from Trump. This wasn't just a short-term political trade. Like he's leaning into this. You know, his family's talking about digital assets. The only other thing that was surprising are the aliens flying over my head. Other than that, you know, I think those are the two things that I did not see coming. So.
And what are you excited about for 2025?
I think continuation. I think we have a good year next year. I think we have a good year. I don't think it'll be as strong as maybe this past year in terms of asset prices overall. I mean, we've had two strong back-to-back years. I think we just got to see where inflation lands in the second half of the year.
Alex?
I would agree with Ram, actually, very much, very, very much. It's the surprise was the extent of how much Trump and the administration leaned on crypto and Bitcoin. It was extreme. Like one thing is like, okay, he will be supporting, he will be getting rid of the chancellor. And a different thing is seeing what he's done. It's like, wow, Jesus Christ. And for 25, continuation. Yeah, let's toast to continuation very much so. Yeah.
It sure is going to be interesting. I'll throw in mine. I agree. Huge surprise on the regulatory whiplash. I didn't expect it to be so thorough and so fast. I'll also throw in, I did not expect the rapid spread of AI impact. I did not expect it to be something that everyone's using so fast. And I still haven't got my head around how it's going to impact the crypto market. I must confess, I do need to spend some time reading over the holidays about what that could look like going forward. Also, I did not expect the ETH spot ETF listing. I was caught offside on that one. And the acceleration of geopolitical fractures over the past month, let alone the past year, has been faster than I had feared. Most excited about 2024, the end of the Ukraine war. Got to be honest, that's going to definitely put a cherry on the cupcake of the good tidings for markets that we've seen.
Yeah, that'd be very good.
And I think it will happen. That would, we are finally going to get there. Now, to end on a festive note, since we're heading into the holidays, downtime, I'm going to ask each of you to recommend something that you've enjoyed recently. A book, series, movie, anything to help us unwind over the coming weeks. Mauricio, you go first.
Oh, that one caught me off guard. I haven't read this book yet, but it's on my list. It's the book that Anthony Scaramucci just published, a book about Bitcoin. The foreword is by Michael Saylor, so it's on my list to get, and then I'd love to read it over the holidays. So that would be mine. Awesome,
Alex. How about you?
I don't have anything. I haven't. I would say just buy shitcoins. Nothing. All I read is lately is just research markets and yeah. So
buy shitcoins. Is that a New York Times bestseller? I thought I saw that.
Alex, I think you should think about writing a book with that title. Are you going to be taking time off over the holidays?
Only three half days. How about
3
you?
hours within those 3 half days.
3 hours. Yeah, not going to have any time for reading then. How about Ram? How about you? Have you seen or read anything fun recently?
Yeah, I've got a book on my desk right now. I'll share with you. It's a really cool book. It's called The Power of Myth by Joseph Campbell. So Joseph Campbell.
Oh, I love that author.
Well, he wrote like The Hero's Journey.
Yeah.
Here's Joseph Campbell. This is an interview he had with, I think, the late Bill Moyers a couple decades ago. And it's an exploration of mythology. I think if you want to understand money and memes and the deep-rooted means and they go into deep in human nature, and it goes back to psychology and mythology. He's a student of Carl Jung. Is a super interesting read. It's accessible. He goes through kind of the classic archetypes and other things. I think it's a real enjoyable read this time of year.
Okay, everyone take note. I'll throw in mine also a book, A Gentleman in Moscow. Absolutely loved it. Haven't seen the series, don't want to because I loved the book so much. And it is a reminder of the value of having a store of value should you be debanked because of your political opinions. But apart from that, it's just beautifully written. On terms of TV series, very much enjoying something streaming on Disney called Interior Chinatown. Just weird and one of the very few Chinese-leaning series that isn't all about martial arts. It's actually about character development. Nothing against martial arts. I also very much like The Brother's Son, which was about martial arts and baking, my two favorite themes. However, I leave you with all of those fun things to do over the holiday. And Alex, we do expect you to report back on what you did over your 3 half days off over the festive season, right?
Right. Yeah. By the way, one quick one. The Day of the Jackal.
Awesome.
It's a show. It's off a movie of the 70s. In Spanish, El Día del Chacal. It's a fantastic show.
El Chacal el venezolano.
El Día del Chacal.
Yeah, he was. Where is it? Yeah. Where is it streaming, Alex? Or is it?
I don't know. I forget.
Okay, we'll look it up because that sounds like the kind of thing that I would like. I hope you all do get to take some downtime over the holidays, and all of you watching, listening, I hope you get to enjoy some fun festive times as well, because we have plenty to celebrate, and we will hopefully have plenty more to celebrate in the months to come. Mauricio, thank you so much for joining us. It's been an absolute pleasure having you here. Ram, Alex, thank you very much also. And on behalf of all the Bits and Bips team, on behalf of the whole Bits and Bips team, we wish you a very happy holiday season.